Good afternoon, everyone, and thanks again for joining us on one of the last panels of the 2022 Sports Analytics Conference. My name is Zach Schmitz, and I am a first-year MBA student at MIT. And it is my pleasure to announce the panel today of The Numbers Behind the Books, How Gambling Companies Leverage Data. Our panelists today are Gene Lee, the SVP and Chief Analytics Officer at Caesars Entertainment, Jeff Ma, the VP of Startups at Microsoft, John Sheeran, the Commercial Director at FanDuel, and we are moderated by Mike Morrison, the Vice President of Business Development at ESPN. Our panel will run for 55 minutes, and you can leave all of your questions on Twitter using the hashtag #NumbersBehindTheBooks. We'll save 10 minutes at the end for Q&A. Over to you, Mike.
Thanks very much. So good afternoon, everyone. Thanks for staying with us late in the day. We're about to dive into the fascinating discussion around sports betting and analytics. There's obviously a incredibly robust discussion these days. I don't think there's a day that goes by that sports betting isn't among the top headlines, and it's an incredibly fast-moving space. So as we start and think about analytics and sports betting, Gene, and you're sort of the self-prescribed expert here, so we're going to go to you first. And maybe help us define what analytics means to sports betting.
I think the short answer is it's leveraging data and insights to make better, smarter decisions. So whether it's a marketing decisions, pricing decision, you choose your pick, but it's just really around just smarter decision making.
And have you been able to kind of spread your influence from an analytics standpoint across the whole organization? Because obviously you're looking at it from a Caesars corporate perspective, and now suddenly you have this new developing area in sportsbook that you're responsible for.
Yeah, so my team covers a lot of different areas of decision support. Traditionally, we grew up in the brick and mortar space, so it was really around, VIP analytics, product and gaming analytics, decisions around the floor, marketing analytics around offer optimization, revenue management, hospitality, labor, food and beverage. So how do you price hotel rooms, menu pricing, and over the past year, we've been focusing on digital space. So learning how can we make smarter decisions in trading, pricing, marketing, cross-marketing, VIP decisions as well.
So John, from your perspective, you spent a number of years in Europe. You saw sportsbook evolve a certain way there. You come into the U.S. market. You were able to design it perhaps differently from the beginning. What is the biggest difference from your perspective in terms of how we're applying analytics now versus maybe how it was done in the past?
Yeah, I think we were lucky. We had businesses internationally that focused on US sports already, and they were a key requirement, particularly in Australian sports bet, where the NBA was our third highest sport anyway. So we'd probably 5 years head start on a lot of the other operators in the US when it comes to using analytics to inform decisions around probabilities and how we go about building models. They're probably the two main tasks that our quants and analytics teams led on initially. And yeah, I think when we launched then in the US, I think the acceleration from there was the key point for us. We were keen to invest in other sports that maybe weren't as high a priority, like the NFL, and I think we got ourselves into a position where our product offering is probably best in market based on that advantage we had and the acceleration that we utilized when we got up and running in the US.
So we were talking about this before, your definition of analytics. In some ways you feel like, Jeff, it sort of gets thrown around very loosely. And I think your point was you think it is well-defined perhaps in sports betting, but maybe not as well-defined otherwise.
Well, I mean, analytics is just like a ridiculous word now. Like everyone uses it and doesn't really know what it means. Like, you'll see some decision that an NFL coach makes and Chris Collinsworth will blame it on analytics and everyone goes, oh, these nerds, whatever, right? And it's in sports betting, I mean, analytics is at the core of everything that anyone that is professional does, right? Whether it's these guys on the evil side of the counter or whether it's the people that are trying to make money as sports bettors, right? Like the only way to make money sports betting really is to have analytics at the core if you're originating. Obviously, if you're someone that's just following the market and betting in front of the market, you probably don't need analytics, but you need some level of analysis and tools to do that, some technology. So I think, yeah, it's well-defined, I think, for betting. But I do think there's also things that people say, even in betting analytics, which aren't really analytics, like they'll analyze trends and things like that. Like, on the third Tuesday of every month, the home team covers 75% of the time. That's not analytics, that's just idiocy, right? So
how do you feel about how the casual fan's going to use analytics in terms of betting?
Poorly, probably. I mean, mainstream media is not, no offense to ESPN, but they're not doing service to how to portray sports betting, because they're just taking like people that are known faces and that know sports, like, and trying to get them to talk about sports betting, and they don't have any. Now, the other problem is that someone that knows analytics really well is going to probably suck on television, right? And so like you don't have a great crossover of, I mean, this is not like it's not dissimilar to the world of finance and things like that. Like TV and these analysts become a lot of education, I mean, a lot of entertainment versus like education. So I think there's like companies out there like, Unabated and things like that are trying to give you tools that like allow you to use analytics to make better decisions in sports betting. But I do think the most common use case right now is still a casual bettor who just really wants to get a bet down and doesn't want to I mean, using analytics is work, right? Like
right.
People are just inherently lazy. So if they have an opportunity to make a decision that's a simple decision, like, I like the Cowboys tonight because I am a Cowboys fan, that's what they're going to do.
So Gene, without sort of speaking about proprietary aspects of what you're doing at Caesars, how do you deal with all of this, right? I mean, Jeff speaks about use of analytics, and maybe the casual fan will use, the tools that are available to them, or maybe not. How do you make that available to bettors, and how do you think about it from a management of the sportsbook standpoint?
So you're asking about the sportsbook aspect, or
Yes, the sportsbook aspect, yes.
So we provide, like a lot of great markets. So when you go watch the Super Bowl, there were hundreds of markets available, and we provide in-game betting. And so these are kind of the tools with prices that can enable customers to make whether or not they want to make that bet or not. So I'm not sure if I answered your question correctly, but it's just analytics for customers to make smarter betting decisions, or
So do you make tools available to your customers to help them bet smarter?
So we've come out with a lot of educational videos. Kenny Mayne, has a lot of fun little cartoon sketches that actually right now I think we're in the education phase, and so we are more educating customers on what a prop bet is, what does money line mean, and so I think we're still in the early days of that. So I mean,
but it's like a misaligned. The question's kind of silly, right? Because it's a misaligned incentive. They don't want to educate people to make money because they make money when people lose, right? So they don't want people to be better at betting. Like I totally get like educating them so it's like more approachable, but that's the hardest part about this business, which is the reality. And like you two are nice people. I'm sure you're not out there trying to make people lose, but you only make money if people lose.
So John,
that's the reality.
So
do you agree with that, John?
I would say that the question is slightly counterintuitive, but fundamentally I think we're in a place where we just want bettors to be as informed as they can be. Does that mean that we're going to surface internal IP around analytics and modeling and share 100% probabilities? Not all the time, but there's certainly more that we can do to help make bettors make a better decision, which you might argue is not our end goal, but certainly want to build a more sustainable market over time. And I think that's an evolution that happened in Europe and in Australia over time, where you're trying to give bettors more information in real time, and they'll make better decisions. Of course, some of them will still bet the Cowboys because they like the Cowboys, but I think all we can do is take it as far as we can and kind of help influence their education.
So we were talking about this the other day about odds, right? So, today, every sports book offers potentially different odds.
Yep.
Maybe it's a half a point different, maybe it's a point different, which is sort of seems, counterintuitive to a lot of other markets that we're familiar with. There's price comparisons, stocks are valued at what they're valued at. There's not a different price depending on what trading engine you use. So does this continue for a long time where, each betting house, each sports book is going to continue to offer different odds, Gene, or do you think ultimately it consolidates into, one approach?
I think if you look at what happened in a mature business like hotel pricing in Las Vegas, there's going to be a transparent pricing market and then an opaque channels, and those opaque channels is where a lot of the big players will compete. And so the opaque channels, maybe someone that's worth a lot to the casino will get a free hotel room. They don't play the Expedia price, or they might get $10 off. And so that opaque channel is kind of, I think, the next frontier for competition.
Can you explain to them what you're really saying? It's essentially you're saying that like people that win won't get the best prices, and people that lose will get the better prices, right? So
Yes.
it becomes incredibly predatory in my mind if you think about that, because you're basically like, like the challenge with all of this, and again, I don't fault you guys because you have to make money, but you have to call a spade in this situation, which is that, they're not doing things to help the bettor, basically, because they ultimately want.
I think it's helpful to take a step back and understand, why did states legalize gaming in the first place? And it's really, the primary reason is to grow revenues for the state, budget deficits. And so when they select and license operators to offer online gambling, the objective function for both the state and the operator is to responsibly grow as much revenues as possible. So leverage analytics to improve decisions at the end of the day to fund state initiatives.
So again, like the statement that you're making is essentially that the reason that the legalization happened is because states needed money, right?
Yep.
And they needed a new revenue source. The only way that they make money is if people lose, right? That's the revenue, and that's the unfortunate thing about this business, is that's the case. Now, I think one of the things that would be really interesting to hear from you guys is how much you think about the pace that they lose at. Because if you think about like gaming mechanics in like a really good video game, they're built so that like you don't lose a lot, right? Because otherwise you're not going to come back. So how much do you think about, that throttle of losing players, and the ideal thing is for you guys to have these guys just lose a little bit every month, but never ever quit.
The optimization function is lifetime value. So over the long haul, we don't want people to burn out. We don't want people to have a terrible experience and you'll never see them active again. And they have to bet within their means responsibly. And so the objective function is we have to predict over the long haul what's the safe and responsible way to maximize lifetime revenue. So that's our objective function. And we've run lots of tests around, this is where we tweak hold. Hold is the industry metric for how much the house has an advantage on things. And so yes, if you crank up the hold, they're going to lose really fast and have a negative experience, whereas if you dial it back, and so there's always a debate with the industry.
But your casino is at least known and purchased one of the casinos that has the highest hold, right?
Yep.
So how do you rectify those two? Because you're essentially throttling the hold as high as you can, and that's sort of like what that company was known for, right?
So we've run a lot of tests, and for us, we've have a responsibility to shareholders and to the state governments to maximize revenue, and we've found through trial and error that was the profit maximizing decision.
So John, in terms of let's say the casual bettor, they're going to care as much about where the odds are? Are they just going to go to their favorite sportsbook?
Look, I think right now there's not that many operators out there that are different in terms of their approach to pricing. Obviously, a lot of the major operators are buying supplier-led pricing in externally. For at least for most of the core sports, we're in a position where we do all of it in-house. So I think to answer your question, I think that the vast majority of recreational bettors in the US are not even aware that there's a price difference between our book and somebody else's. They have this kind of culturally led idea that the odds in Vegas are the odds, and that's just not simply the case anymore. I think, FanDuel did more handle on its own than the whole of Nevada did on the Super Bowl alone, just as one sample size. So I understand culturally people are pointing towards Las Vegas, but our perspective and our aim is to lead on pricing independently of what market consensus prices and offshores and other books are doing. And I think we're a long way from finalizing that, but we've certainly made an effort. So I don't believe that the consumer is fully aware of the price difference out there, but that will happen in time, like it did in Europe.
And and what happened in Europe? I mean, do you think it depends on the type of fan or bettor you are, or are all bettors, all fans shopping around?
So I would say that over time it will decrease. Actually, I think for price differential, it almost contradicts exactly what I just said. But you're in a position where right now there's 35 operators in Colorado, for example. There'll certainly be consolidation over the next 10 years, and as people get good at doing their own odds, everybody will self-identify from that perspective, and you'll see a migration to what they do from a far more consolidated marketplace.
So Jeff, how do you approach things as a bettor? Do you shop around for the best odds? Do you stay with one particular book?
I mean, historically, I'm not really a big bettor at all anymore, but I mean, the reality is like the professional bettors that I know, that price is all that matters. And there are operations of professional bettors that just, all they do is basically shop for the best price and find the best price and look for arbitrage on pricing. But the casual bettor, I think to John's point, I don't think thinks about that, right? Because again, it's like it takes work, right? You have to have multiple books, and it's not easy to get accounts set up, right? You got to do KYC, you got to go through the whole thing, and you got to have money at these places. So, I mean, I think the reality is that the pricing is not a big differentiator right now. Now, again, like to John's point, I think people may get more sophisticated, but the problem is that even within that sophistication, there's going to be all this consolidation. And, you know, like if you're that sophisticated as a bettor, you're probably going to get, you know, banned or kicked out or limited from a lot of these sports books. So it will be interesting to see how much it matters to compete on price. And, you know, I'm just, you know, you have like the Westgate or, you know, like South Park or South Point, or Circa that are, you know, trying very hard to be, you know, put out the best prices in a lot of ways. But I think I agree with you. I don't know if it really matters for the mainstream bettor, especially right now when people aren't very sophisticated.
What do you think, Gene, from a standpoint of how you segment the audience? I mean, how do you factor that in? Because, you know, a bettor who's, let's say, you know, an avid sports fan who maybe is a casual bettor is betting for a variety of different reasons. Maybe they're just betting because they want to bet and support their team. You know, and it's not more complicated than that.
I think you'll see this in the extreme bets, and so the long shots that are like plus, you know, 10,000, like intuitively, the casual customer doesn't have an intuition behind the difference between a plus 9,000 and plus 10,000 bet. It's just a long shot, and so they're just chasing the lottery phenomenon that I think a previous talk was talking about, and so that segment will not really pay attention to the price because they don't really understand and can conceptualize those long shot bets. So.
This is like a well-known thing in like horse racing. Like people can't tell the difference between bad odds and really bad odds, right? So long shots in horse racing are typically just bad bets.
So John, as you look at the market in the U.S. versus Europe, you know, a lot more sports in the U.S. in some ways, or wider interest across more sports. Do you see this market, you know, evolving differently as a result of that?
Yeah, there's a huge difference. I mean, the markets that we offer are far more broad in Europe than they are here. We don't have regulation in the same way that we do in the US. So, for example, we're prohibited from betting on, you know, Tony Romo's tie color and on the announcement for the Super Bowl or whatever it might be. They are, you know, markets that are fully accepted in Europe that people will wager on. There's I think a natural maturity in the US over time as we build confidence with regulators that there isn't integrity questionable reasons for them to ban and prohibit certain market types that don't happen on the field of play, as they like to call it. I think regulators have done a good job in general, but I think they're a little reluctant to open it up because of what might happen rather than thinking about it in a different manner.
Did you think we get to a point in the U.S. where you can bet on a wide range of things? I mean, let's say everything. I mean, in the UK, for example, you can bet on everything from elections to names of, you know, the royal children and so on and so forth. I mean, are we going to get to that point in the U.S.?
Yeah, I think it'll take somebody to step over the breach. I think about things like the presidential election. It would have been, you know, probably the biggest single sports betting event had it been approved in any state in the U.S. We've taken, you know, in excess of $500 million on that internationally in one event. So I think people are missing an opportunity. Canada is an opportunity in Ontario to maybe lead the way, and they have a really broad directive, and we're hoping to launch there in the next month, and hopefully they kind of illustrate the opportunity that is there, and some of the other regulators in the U.S. take it on board.
And when you get to that level of optionality, where does analytics still play a role?
Not in the color of the Queen's hat at Royal Ascot, unfortunately, but yeah, look, we leverage it a lot for all of the core sports, particularly the US ones, but not for novelty markets like that.
Yeah.
I mean, the election coverage was a huge analytical thing, right? Yeah. There was, you know, the offshore markets, as he's referring to, they were very active, right? And if you followed them, even the night of the election, you know, there was a point that night where Trump was like minus 300, I think, at one point, meaning like the markets thought that he had basically, what, like a 75% chance to win at that point. And like we've talked, like I do a podcast and we interviewed a guy who did a lot of work around, one of the things when we talk about analytics, right? At the core of analytics is data, right? And analytics is actually like the actual act of analytics is pretty much a commodity. Like all of you guys here know how to do, whatever method it is, build a model, logistical regression, all that kind of stuff. The key kind of to getting an advantage in sports betting is actually getting like data asymmetry, which is getting data that no one else has. And so at the core, you think a lot about in the elections, are there ways that you can get data that no one else had? And the guy that we interviewed on our podcast, who really thought Trump was going to win, he had a lot of data from like Florida that he thought that Florida would actually go to Trump, which it did. What he made a mistake was he thought that was actually going to correlate with some of the other states that were swing states, and it ended up not doing it, right? Because the reasons that Florida swung were different than just traditional like bipartisanism. So
Well, it's almost like as we think about data as a predictor, obviously, and with betting, the feedback you're getting from betting markets informs what potentially going to happen, right? So whether it's political events or sporting events, that point in the European markets you're seeing in a quite a robust way, where the betting markets are referenced as a news story. We're not there, obviously, here in the U.S. at all.
I mean, I think there's a concerted effort for people to incorporate it in the narrative or in the broadcast that they give. And yeah, I mean, in every walk of life in Europe, it's normal for people to reference the odds of something happening. And I think it's a more finer point in Europe than it is here. I think people have this idea of the desert in Las Vegas and point to it and say, well, it's minus 300 there, without maybe necessarily understanding what that is referencing and what information that's adding to the point. But I think that will come with time as well. Like I said, New Jersey's just been the hub. New York is so much bigger than we expected. And I think as that rolls out across the country, you'll continue to see an escalation in that.
What surprised you about the U.S. market?
The size, for sure, was the first thing. We had no concept that, even recently, and Gene and I spoke about it earlier, trying to model out what New York would look like internally was a pleasant surprise on day one. Maybe not for, I'm not taking a shot now, but Caesar's CS team. But for all of us, it was probably double the size that we expected it to be. It's an absolute monster at this stage, and I think points towards some of the other bigger states that we hope to get in the next couple of years. So size certainly was probably the biggest thing we noticed. It was far bigger than the opportunity.
So you really, because you would sort of argue that large state, large population, huge sports market.
I think inherently it's as simple as the idea that far more people in the US were betting pre-regulation. Like when we opened the doors, people weren't coming in saying, how do I place an 8-team round robin? They already knew. And I think that's kind of the gap that we missed.
How are you reaching out to that market? I mean, because obviously there's an opportunity to convert what was legal or still an illegal betting market in certain states to the legal betting market.
How are we?
Yeah, how are you actually activating that group? Is it just sort of, you're assuming they're going to find you and they're going to begin to bet?
Yeah, I mean, I think offshore versus
they're spending a lot of money.
Yeah.
I mean, a lot of money. What's the cost of acquiring a customer right now?
Ours isn't as bad as you might think because we have a database from the DFS world, but there's certainly people out there paying $500, $600, $700 per acquisition, which is, unsustainable over time. We rely on product differential. I think our product versus offshore is massively different. You can do a lot more with our product internally than you can do with some of the offshores. But it is a key point because, the taxation in New York is pretty heavy, let's say. And I think that's a good example for, us trying to lobby the regulator to explain to them why pricing is uncompetitive versus what might be available offshore in those instances.
And we were talking about this the other day. I mean, Massachusetts is obviously still not a legal betting market. And a lot of the non-legal markets, you become aware of things like Venmo being used to place bets. Let's talk about that a little bit. Like, what is the point of view about use of payment systems to place betting in illegal markets or even in legal markets?
They're not really used to place the bets, right? They're used to transfer the money between. They still have like all these illegal books. These guys probably don't want to talk about unregulated books that much, and I understand why. But there's a ton of books right now that you can still bet, like with locals or offshores, and they all have websites, they all have mobile apps, so it's not really any different experience than what you get with the regulated. I think the difference is that you don't, for many of these, don't even have to put up money, right? You're just betting on credit, and the KYC isn't there. I think the problem is that they're not regulated, and so you can't trust them as well as you can
I think that's the
trust
key
these
advantage
ones.
of why it's going through the regulated markets is the trust with the bigger names, the bigger brands. And also, for Caesars, one of our competitive advantages is our retail presence. And a lot of customers still like to use cash. And it's when you go to the casino, we still have all the AML checks at the cashier cage, but it's a lot easier to fund your wallet through the cashier cage. And so that's, while Venmo and there's a lot of other, like PayPal and other ways to fund your account, I think it's just providing options to customers that make it as frictionless and easy as possible to get your money on the system.
So pivoting a little bit here, Gene, you've been in analytics for how many years now?
11 years.
So dream job.
Yes, my dream job at Caesars, yep.
How did you get into this initially? What drew you into this particular area of the business, in analytics in general?
I actually was a big customer of Caesars before I joined as an employee. And so I lived in Chicago, frequent visitor to the Horseshoe Hammond property, and I would fly to Vegas once a month to play poker. So in the mid-2000s, I was an avid poker player, and on one of those trips, met someone from HR at Caesars, or at Harrah's at the time. So got in through the poker channel.
And how have you seen the industry change, over this time period? I mean, did you imagine you'd be at this point where you're heavily involved with the sports betting operation and applying, where you came from an analytics standpoint?
Well, back then, sports wasn't a big thing, so it wasn't a key focus for the company. It was kind of put in the worst location, and it was kind of a break-even at best operation that hopefully their friends came and played a little blackjack, but it was kind of not viewed as an enterprise priority. And then when PAPS got repealed and we went through, the mergers, both the El Dorado merger and the William Hill merger, it was more recently that we actually started paying attention and going, a lot more resources into looking into the sports betting space.
I mean, I think that's an interesting thing to just kind of double click on, because I don't think people realize that, right? Like the actual brick and mortar businesses around sports betting were more or less like loss leaders, and they were almost like the casinos didn't even want them to take up real estate, but they had to have them because they would kind of drive more people into their property to actually play table games. And the reason that's an interesting thing to think about is it's not like fundamentally the business has changed because it's gone to mobile, it's just become more accessible. So if it was a bad business when it was brick and mortar, is it going to become a better business because it's mobile, just because you can get more volume? Probably not. So what does end up happening? Does it mirror what happened in the brick and mortar, meaning those sports books online become just ways to get people into an app where iGaming becomes the core, right? Like being able to play online casino games and things like that.
I think that's the best way to extract the highest LTV out of a customer. The sports was a great acquisition tool, but then whether it's iGaming or brick and mortar or even online poker in certain states, it's really to grow the total wallet and the total experience.
But if that's true, a lot of people are going to lose a lot of money right now in the public markets. No, I'm not I'm not being facetious. I'm saying that's the reality right now with all the investment flowing into these businesses, because if we don't believe these are long-term viable businesses, which I think it's a challenge, right?
Yeah, I mean, we've stated publicly we still want to make the online sports business a high-margin business by standalone, in the future. So we're still aggressively investing into the long-term future of the online sports business. But our true optimization function is just total wallet share. So in that 51% tax market that we were just talking about in New York, if we can convince 5% of those customers to make a Vegas trip this summer, and what's the average spend in Vegas when you factor in food and beverage, hotel, and gaming on a 3-day trip, the LTVs get really high very quickly.
So I guess from John, from your standpoint, how does FanDuel approach this? Because you don't necessarily have the brick and mortar piece as a Caesars does. Do you view lifetime value differently? Do you think about the dimensions of how you would work with a customer in a different way?
Yeah, look, I mean, we have similar businesses. We have an online casino. We obviously have a TVG horse racing business as well. So there's certainly a desire to cross-sell to those more profitable channels for sure. But I think Jeff's point and the finer point on this is that responsible gaming is a huge part of what we do. If you look at the European model, it's fundamentally broken over time, and now the regulator, when it's almost too late, has forced the hand of operators. And I think one thing we're super conscious at FanDuel is not letting that happen in the same way. And again, Jeff is looking at me, squinting his eyes, saying, like, what does that really mean? You're out there to make money? And that's, of course, true. But I think the worst mistake we could do is replicate what we did internationally and ignore it, because that's, at core what happened. And, for us, it's about building models around, sustainability for consumers and flagging and checking in with them more often. And we have certainly a direct strategy to be more on the front foot when it comes to that aspect, because Jeff is right. At the end of the day, people are going to lose a lot of money to this industry over time. They already have. But it's about trying to be as, I think, I don't know what the right word is, but trying to be aware of that as we make our decisions, I think, is super important.
What I was kind of like, I mean, obviously the fan or the bettor losing is an issue, but like I'm just more curious about, and I know it's hard for you guys to address this, but both of the sort of scenarios that we talked about, right? You have your brick and mortar that you can drive people to monetize at a higher rate. You potentially have other businesses that you can drive them to. But these businesses are being evaluated by investors on sports betting right now, right? They're not, there is a promise that sports betting is going to be a valuable thing for them, right? So if that doesn't end up being true, i.e. it's just not a high margin business and whatnot, what is going to become of this industry?
Yeah, I think that's too pessimistic a view. I think we've built over time a more profitable business from a whole percentage point of view. You can look at our market share when it comes to revenue, and we over-index significantly there. So I think leaning on the recreational bettor and giving them products that they can interact with that don't mean they have to bet $1,000 on a game is a way to do that. And in 2021, our whole percentage was over 9%, and people in Vegas think it's a 5 to 6%. We have a structural advantage because of the way we've built our business, and we believe we can extend that over time.
I also think there's examples in the European market which have demonstrated at a mature state you can have profitable EBITDA margins that investors care about. And we have experience working in the video poker business. So the video poker business is another example with high volume, low hold, low expected value for the casino, but huge volumes. And we've kind of figured out how to make that a profitable business as well over time when you have a low margin business. So there's examples out there. So I have a little more optimistic view that this can be a profitable channel.
I hope so.
What does this do, to fan behavior over the years? I was at a conference recently where there was discussion about, are you going to remember the time you won that crazy parlay, versus like the famous home run or the famous touchdown? I mean, is the new fan going to approach this in a different way through an eye of betting?
Yeah, I mean, I still remember when Virginia lost in the March Madness a few years ago, and that never happened. The number one seed loses to UMBC, and I was doing in-game betting at that time, and I thought, Virginia can never lose. This is a 16 seed, and so some of those moments you'll never forget. And so I think just like there's memorable catches with the helmet catch at the Super Bowl, there will likely be memorable betting moments that people will have an emotional connection with.
So you're saying it's the same. So whether it's
just a
memorable betting moment,
yeah,
or a famous sport moment, from your perspective, you're now saying they're on the same level.
Yeah, especially when there's money involved, you'll never forget. So.
John, how do you see that?
Yeah, I mean, I just see people, for me, the biggest difference, I spoke about it with some of the leagues already, is that people are now consuming the game in a very, very different manner. You bet a total in an NBA game, and you can pretty much tune out until the last 2 minutes for most games and come back to it an hour and a half later and, understand and sweat whether your bet wins or loses. For products like Same Game Parlay and the player prop element, which has been a massive growth area for us that we've really, really focused on improving the proposition on. You're now involved in every possession up and down the game. Every bounce of the ball matters to an assist, a rebound, a point, a steal, whatever it might be. And I just see now more so than ever, when the fans are involved at that level of the sport, they're just going to stick around far, far longer and enjoy this experience in a very different manner.
And how do you think your marketing addresses that? In other words, because now it's all about customer acquisition, but how do you begin to get into the storytelling around betting and engage on this front?
Yeah, I think our marketing team have done a really good job of leveraging what is Same Game Parlay, educating people as to how it appeals. And then obviously we've used, social media and influencers to try and, give people a feel for what it's like to place that bet and interact with the product. And we've seen huge success from that.
Jeff, what are your thoughts in terms of, I know you got a lot of thoughts on this, right? So in terms of where the betting industry,
lot of thoughts,
where the betting industry is going, has anything so far surprised you or counter to that disappointed you?
You can't ask Jeff Ma a question like that.
Yeah,
He's the most pessimistic guy I've ever met.
No, I think so. I think there's like a first principles question around whether like legalization has been good for the betting industry broadly, right? And it certainly has been from a safety standpoint, right? Like because it was unsafe in some respects, but like they're not across the board, but certainly in edge cases. So. But I do think like it's challenging to think about. So I've been an entrepreneur my whole life until the last 2 years. And when all of this was getting legalized, people asked me like, why aren't you starting something in sports betting? And, if you're an entrepreneur and someone tells you that you can enter a market that's highly regulated, that has incumbents with lots of money, that, oh, by the way, you might have to build 51 different products for, or 50 different products for, that's low margin, that, is not incredibly innovative because of the licenses that you need to like pay to get. I mean, it just is a really challenging area to see real innovation in, right? And I think, I worry a lot about all these new incumbents coming in that are going to, like, because the cost of acquiring a customer, it's been documented, it's so high right now. And it's not sustainable, right? Because ultimately, they're able to do this because, some of these companies went public or they have venture money and all this kind of stuff. They're able to do that, but that's not sustainable over time. And if you add to that the fact that, like, the actual TAM may shrink over time if people lose, right? And burn, right, out of betting because they lose. Again, like for me, it's a tough industry because you can't make money unless other people lose, right? And I've bet my whole life, and I know that there are challenges with this whole idea of problem gambling and just like what it causes, and the idea that like you have a business that is predicated on other people losing is very challenging to think about as an industry that we do going forward. I think the other thing that worries me is that sort of the regulators or the states kind of like looked at this pot of gold that would be out there for them, and the reality is like the margins will probably end up being smaller for them, or some of these tax rates are unsustainable over time. So I just think there's a lot that's really unknown. And I wrote an article for you guys when I worked for you, I don't know, like 10 years ago, that talked about what would happen when things went legal, and many of the things that I predicted at that time have happened, right? And it was a pessimistic view on sort of how the country would go to regulation. So I'm hopeful that we'll see more innovation, and I have huge respect for these guys, even if I'm being a jerk right now. But they're like the idea that like there are smart people thinking about how to solve this problem and trying to make this interesting. Now I think again the problem is that they have these forces on them that make it hard for them to really innovate, right? Like John was on our podcast and we kind of grilled him on some stuff, and we talked a little bit about some of the technology challenges they face that don't ultimately help like let them create the products that they want to create, because so much of the time that they're going right now and the effort is prioritized around opening new markets, right? So they can't prioritize a great feature that may be better for 10% of their base because they're trying to open Colorado. And like, as someone that's run companies before, I can't blame them for prioritizing something that drives more top line revenue for them, over something that creates a better experience. But how long is that going to continue? And that really stifles the idea or the opportunity for innovation within this industry.
So you're saying in some ways, I think if this is right, Jeff, that by the regulatory structure, you are limiting the innovation because you have to focus on the market launches, you have to focus on the compliance, and that may mean you're prioritizing that ahead of areas you can innovate.
So the key to stimulating innovation is to lower the barrier to entry, right? Like that's the key in everything. So anytime you have regulation, right? You have like some sort of like regulatory capture or whatever that you could do that could give you some innovation. But generally, when you like when you raise, like to build a new sports book, right? You need so many things right now. So that's really hard. And like licenses and everything about it, it's just a very hard process. So then you have fewer people in there thinking about how to solve these problems. And then, you have some of the bigger sports books, not one that's on the stage, that are just sort of like really swallowing up markets and really willing to like pay unsustainable amounts to swallow up these markets. And that is completely something that will stifle innovation.
I do want to add there is a positive to some of these barriers to entry. And so when you ever go through the licensing experience, there's, all the executives are past the suitability measure. So, there's, folks that you can trust leading these companies. And you can trust that there's extra sets of oversight. Because, yes, that is kind of the casino business. There's lots of revenue at stake, but there's also negative externalities for constituents, and so you kind of need these barriers so that the handful of companies that are active operators can be on the same page when it comes to enforcement of things that help protect society.
So you're speaking, Gene, to the fact that there's a lot of accountability, a lot of scrutiny you have to withstand, perhaps more than most other industries.
Yeah, like we self-report items to our game and control board in Nevada. When we see something, we say something. We've been role models in this space, but that's just kind of in our DNA, and there's a long comfort with the regulators that you have these relationships, and so that expensive barrier to entry helps favor the incumbents, but it also helps protect, for some of the negative externalities associated with it.
But I want to say a little bit where Jeff was talking for a second. I mean, the question is, does that approach, does the requirement impact innovation in a negative way?
Yeah, we've had complaints for negative customer experience, what we call them withdrawals. There's technology solutions we wish we can implement, but the KYC process, it's so hard and difficult to submit a picture of your license, your social security number, making sure your AML qualified, you don't have any money laundering concerns. So there's a lot of red tape when it comes to just even signing up. And so these are hurdles that usually technology alone can make easier and frictionless, but there's a reason with this, with these regulations that you kind of have to go through that.
How are you finding this, John, from the standpoint of FanDuel?
I think most of what Jeff said is probably off the back of what we discussed on the podcast, and the barriers are certainly too high. I take Gene's points on board, but they certainly will stifle us for some time as we think about rolling out across the country. For us, it's a tech solve problem. Like, we need to figure out how we can get better at what those requirements are, and create a resource independent of that is able to continue to innovate. For us, our market share primarily comes down to that product advantage that I spoke to earlier, and I think, for us to sit back on our laurels and look at the percentage that we have would be a big mistake. So I take Jeff's point on board, and it's certainly accurate, but I think we have a strong desire to overcome it by looking at, how we deploy more resources in the innovation space, because we believe that will, continue to maintain and extend the advantage that we have.
Well, you're almost saying, how do you prioritize investment in innovation versus investment in acquisition?
Yeah, I mean, like Jeff said, we currently have a limited amount of resource, and if a strategy or the discussion comes down to should we build a feature that allows our stake factor customers to bet more, or look at entering Canada, then there's only going to be one winner in that discussion. So it's about separating them.
So in an ideal world, which we all know we don't live in, but talk for a second about how you might approach it differently. Is this I solve this with money, or is this, hey, if we could fast track regulation?
Look, the blockers from regulation will continue to exist because we're on a state-by-state basis, and everybody asks for something different in a different way, and we've had even recent states represent pretty big challenges for us to get up and running. So you'll never figure that out, because that's just the way it's going to be, and we work with regulators to try and influence their decision making around the directives, the legislation and the regulation that they put in place. But yeah, I think you got to separate the two, look at investment resource, look at the payoff. And we've done that, and we believe that that's a positive decision to make.
Just want a quick time check. We have about 14 minutes left. We are taking some questions coming in via social media or otherwise, so we're happy to take any questions from the room as well. So, Jeff, you talk about your experience as a bettor. and you mentioned before you bet less today than you bet previously. Is there any particular reason driving that, or is it about where your interest lies today? Is it about...
Yeah, I mean, I have 2 kids, like a 2-year-old and a 4-year-old, and the last thing I want to be doing is like checking my phone for scores when I'm supposed to be hanging out with them. And betting is it's a very time-consuming business, right? You have to spend and pay a lot of attention. And there's very few bettors. Like my podcast partner, Rufus, is a guy that just bets and forgets and he's very involved, but he doesn't sweat games, is what we call it. And I do think that the market has become a lot smarter. And so, again, like if you use sports bet at any kind of scale, you need to have an edge. And where do you get an edge from? And so historically, if you look at sports betting from sort of like the early Billy Walters days or whatever to now, edges have come in a variety of different ways, right? Like the first people that actually started using analytics, that was an edge, right? But obviously now everyone's using analytics. And then there is data asymmetry, right, as I've mentioned. So can you get data that no one else has? And I think there's some famous sports bettors that have been walking around this conference who are known for actually creating their own data sets so that they had unique data sets that no one else had, and that was the way that they gained an advantage. So for me personally, I don't really have anything. I don't have the time to have an advantage. I have some friends that are good that I'll follow or tail from time to time. And I just generally think it's a tough way to make a living, right? Like if I told you guys the amount of money you would need to bet and the edge you would need to have to make $50K a year, right? Most everyone in this room can get a job, I would assume, that would be more lucrative and have a higher ROI than being a professional sports bettor. It's not an incredibly lucrative thing to do because of all the reasons that we've talked about on this panel. And so, I think it's a fun, entertaining thing to do. I'll always love the idea of watching a game with something riding on it. Like I think that aspect of it, like you mentioned, like is that a net good thing? I think March Madness, right, has taught us that creating games and financial incentive to watch games creates more engagement, right? Like that you don't need lots of money on it. Like you have the $1, $10 office pool and people get really into March Madness for that. Like I think betting is here, it's here to stay. And I think that's a net good thing for us as sports fans and for the leagues and for you guys, right? But I think it is the job that, specifically ESPN, the leagues, and the big sports books have to try to create innovation in this space, because one of the challenges that sports has always had with innovation is it's very gated, right? Like you guys control so much of mind share of sports fans. The leagues control the content there, and the reason that we don't innovate as much in sports or as quickly as we do in other industries is because it's a very closed system, and it's a very, there's a few people that really control what's going on. And so I would just like to see that not be the case in sports betting, so we have some opportunity to really innovate in sports betting. And I sadly think it's going to be the opposite as we go to consolidation.
Yeah, I would just touch on one point you make because I think it's important. We probably took 10 million bets on the Super Bowl this year. And when you talk about the opportunity, the amount of work and the sheer amount of people that can make a success of betting, and everybody talks about analytics and how it gives you an edge. And I think a lot of people in the room might make the assumption that they could build a model that will make them profitable. We probably had 4 or 5 accounts entirely across that 8 million bets, 10 million bets that we would knowingly make a change to our lines, particularly across core markets. Sure, you can specialize in certain areas like player props or smaller markets that might represent a bigger edge, but it's just so hard to get the volume down that you would need to earn a solid wage. And I think that's a really good call out, probably the first one he made today that was worthy, but
Had a couple good ones.
okay.
By the way, we weren't looking to replicate First Take up here, but clearly we've edged against
But
that.
certainly a point that gets lost, I think, in the conversation.
So we're getting a few questions coming in. I think this one ties in a little bit to what, John, both you and Jeff are saying. So the question is there a whale problem in sports gambling? If so, can it be addressed without significantly lowering profit margins for the sports books?
I don't know exactly what the question intent is. I mean,
I think they're equating like whale and sharp, right?
Yeah.
Like so whales are not necessarily sharp, and in sports betting, there's probably very few whales that are sharp. Otherwise, they wouldn't be able to
Correct.
be whales, right?
yeah.
So, yeah. So maybe just change that to sharps, and you can answer that question.
So I guess, part of it is the focus on the, fewer bettors, but fewer larger bettors versus, a wider swath of small bets.
I mean, I hope this answers the question, but I think at core, whales are few and far between, relatively speaking. Of course, they're there, and of course, they contribute significantly to our industry and to our company. I think the RG element that we spoke about is super important in that world. We do take, every step we can right now. Maybe not every step, but we certainly try to do the best we can when it comes to making sure that we're looking after their interests. And then from a sharp perspective, I mean, relatively speaking, it is a tiny amount. I just gave the example, I think, of the number of bets that we would have respected as sharp on core markets on an event like the Super Bowl, and maybe that's a bad example in isolation, but that's another conversation. Are they a problem? Not significantly. I think there's an onus on the bookmaker to be fairer. We don't want to leverage the lazy risk strategy management that I mentioned before in the US that we have certainly inherited from other jurisdictions. Well, that will take some time. And I would also say we're 3.5 years in. Like, this isn't the end state that we have right now, and there's certainly a drive from our side at least to make things better from both of those aspects.
So Gene, what are your thoughts in terms of focus on, the larger bets, larger bettors, larger accounts versus, every bettor is important?
I think the way to answer this is two answers. So from the casino's perspective, yes, there is the Pareto phenomenon where a handful of customers are disproportionate share of the casino revenue. And so we would call them whales of value to the casino. Then that doesn't mean they're sharp. Well, they're not sharp because they're losing a lot of money. But then when you look at the sharps, there's segments within them. How are they sharp? Are they steam chasing and just operationally excellent? Are they arbing different lines, or are they actually on the handful of really truly respected sharp players? And so we just further look at their data and kind of segment them appropriately. But by and far, that's a small population, like John says, at the truly sharp, where they actually can impact the line.
So the other question we have is, I'll paraphrase a little bit here, is when you think about sports betting, is it really just another form of entertainment, right? Is the focus really on the enjoyment of placing the bet and then having extra interest in watching the game, or having more excitement or more stress, depending on the size of your bet?
Sometimes the stress is the excitement. Yeah, I think it is. Like, from our perspective, it's designed to be recreational in nature. The average bet size in America right now is probably just a little bit south of $40. Most people like to have the skin in the game that Jeff alluded to earlier, and I think for $40 on a Friday night, if you want to watch the Celtics and sweat them losing another game, then,
They're the hottest team in the NBA. I'm a Celtics fan, so he's trying to take a subtle shot at me.
I've got no issue with that, and I think that's, like Jeff said, earlier, I think that's net a positive.
Well, so this is an interesting perspective, right? And I would have expected you guys to answer this exactly like that. And I'm not. We've talked a lot about this because my podcast partner kind of laments the idea that he, as a professional bettor, that is a winning bettor, that the world, the regulated markets in the U.S. are not going to be designed for him, right? Mm-hmm. And that's the reality. I've had a past life as a card counter, and when I was winning in casinos, I would get banned from casinos, and I was told that the reason I would get banned, even though I was not doing anything illegal, is because betting in a casino, playing blackjack, is a form of entertainment. And if I am not losing, I'm not paying my price of the entertainment, and therefore it's like I'm sneaking into a movie without paying the ticket. This is literally what I was told by someone in the casino. And so when you ask that question to these guys, I would expect them to answer nothing but yes, it is a form of entertainment, because if they're saying, no, it's actually like a regulated financial market that professionals should be able to make money in, then that's totally antithetical to how they run their businesses, essentially. So,
But you say that as if that's not, something that we're aware of. I think in general speaking, and we spoke already about the percentage of the business that is made up from the recreational customer base, do we want to be in a position where we can give everybody a bet? Absolutely, we already do that. Do we do it to the levels that they want or might like? Certainly not in certain instances. But that doesn't mean that there isn't a desire for us to be more ethical, as you call it, in terms of servicing everybody.
Well, I'm not saying that you're unethical with this. 'Cause that wasn't my point. My point was that your point of view is that this is entertainment versus like.
I mean,
and
for
I'm not
99% of the marketplace, it is absolutely.
right, but your your goal is to provide an entertainment product versus a product that anyone can actually make money off of, right? And I understand.
Yeah, I mean, that's why they say Las
I'm not
Vegas.
criticizing you for this. This is like
Sure.
the reality of the way that this market is going, right? And that one of the reasons that I like look at it and say, gosh, this isn't something that I would want to do is because of that, right? And it's not like I'm one person. I'm not going to change the whole way the industry is going, and I could see the way the industry is going.
Your point is valid, though. Like, I think there's an onus on the bookmakers, the operators, to be fairer when it comes to a broader spectrum rather than just the recreational base. But that doesn't mean that overarching view from us should be that it is recreational. I mean, that's the most sustainable manner that it can be in, and I think that's the right approach. But there's certainly the nuance or the edge case that you speak about a really small minority of people who can't get a bet to the size that they want.
Gene, you were going to say something.
Oh no, we are Caesars Entertainment. Like, entertainment is in our name. Las Vegas is the entertainment capital. So that's the fundamental construct. Like, that's, intended to help Nevada taxpayers get, revenues. It's like, it's intended to provide, revenue. Like, that it is what it is. It's entertainment. And so, yeah, there is a Griffin book to, manage some of the the blackjack players. And so there are suppressions to those that don't contribute to the kind of overall goal. But yes, the whole premise and why.
That don't lose, essentially. Yeah.
Yeah.
The overall goal, right?
Yeah, like that's, we're a public company and we have a responsibility to shareholders to make money. Like,
yeah, I think the ask for the sports books is slightly different, right? We set the lines. It's not like it's just a fundamental edge within the game. And I think that's the onus that I speak about. There's an onus on us to make sure that our lines are as sharp as they can be, that we continue to innovate and get better at them. And we've certainly done that over time. I think that's the loss of edge that you alluded to earlier. But I take your point. Like, we have to get better, but it is difficult from our perspective. When you're offering 600 markets on every NFL game, it is very difficult. The game changes. You can build the best model and have your prices as accurate as you can going into a season, and then there's a fundamental change in the game where the analytics has played a different part. Like, we had a prior NHL model that we had to basically bin 2 years ago because all of the data that it was built off was before they started pulling the goalies. So for our first year here, in the last few minutes of the game, there was a significant edge to be had when you bet with FanDuel on, particularly around goal expectancy. So, that's our job to fix, and I think we've gradually done a good job, although we've a lot more to do in that space.
You mentioned
before.
Agree. You mentioned before the NHL, right? We only have a couple minutes here, but I thought you made an interesting comment about certain sports are underdeveloped from a standpoint of betting experience.
Yeah, certainly the NHL. Like, I look at NHL as a percentage of our total handle, and everybody counts it as a core sport. And in 2021, it was less than 4% of our total handle, but 40% of our actives actually engage with the product in some way. And to me, that's just a strong signal that, by the way, this product is shit. And I look at NFL, I look at the NBA, and where we've got to the number of markets that I just mentioned, 600, 500 games, markets on a game isn't unusual. And NHL is completely underdeveloped from our perspective, and a key goal for us in the next year is to make it more compelling to the casual bettor, although Jeff might not like that.
So we're wrapping up here in a second, Jeff, but parting shots, in 45 seconds or less.
How many did I get in?
There's like the reality of everything that I'm kind of saying is, I think there are just some harsh realities about sports betting and the legalization of sports betting. And I'm not saying that, like, if I were on their side of I never would go to that side, but if I were on that side of the business, that I wouldn't be any different, right? Like, they're making decisions based on what their objective function is, and that objective function is to make money. I get it. But I think as entrepreneurs, as bettors, as people that are thinking about building businesses, like, you have to understand these realities when you go in, because, like, the thing that is tough right now is there is a lot of marketing that makes you believe differently. And I'm not saying you guys necessarily do it, but there are things out there. Every story about Mattress Mike or about some 15-game parlay that someone won, like, that's designed to make you think that you can win and that they want you to win, right? And the reality is not that way, unfortunately. So that's just the reason that I'm being a jerk.
All
Well,
good.
it's one of the reasons.
One of
The other one is a bit more obvious.
yeah.
But I think one thing we can, or one thing that I can state is that if you're passionate about this topic and this is something you're considering early in your careers, whether to build a company or to, be a professional sports bettor, that, the other path of like just working for a company like Caesars as a data scientist is probably a long-term safer route, and you could probably discount your cash flows from that perspective and be a more profitable decision than trying to beat the book where information is very, in this age, very, commoditized.
John, any last thoughts from your standpoint? I'll give you the last word.
No, that's it. I think it's been I understand everyone's perspective. Balance, I think, is important. Like I said, it is only 3.5 years in, and, we're excited about the opportunity, excited about where this goes. And, we're certainly on the innovation side, leading the way when it comes to what we can do. I already just mentioned about hockey, and that's something that I think is an area. College is another area where there's a huge opportunity for people. I think bettors, modeling data is a bit of a challenge in that world, but there's only room for improvement. I think over the next 10 years, this business is set for the moon for sure.
Great. Well, big shout out and thank you to the panelists here. Thank you for the great discussion. Thanks all of you for hanging with us late.
Thank you, guys.